Hey everyone, me Kevin here. Welcome. All right, jobs report comes out in about 30 seconds. We're kind of excited. Let's see what it is. Looking for a top line number. Is it going to be over 500K? And is it going to be over 550K? Is actually the estimate 554. And of course, the inflation month over month of wages is going to be huge. So let's see what we get. That's going to be exciting. So it comes out any second now. Waiting for it. Let's see. CNBC usually gets it embargoed, so they might have it a few seconds before us. So let's see what we get. Whoa! Okay, it came in at a big miss. That's a big miss. 210,000. Unemployment rate did decline by 4.2, but it's a miss of 210,000. That should be good for stocks. It's not an overheating. That's, in my opinion, better than what we. Certainly than overheating. We don't want to overheat. Let me quickly see if I can find out what the inflation number is. But 210, that's definitely a miss from expectations. We were expecting 554. Okay, here we go. Average work week. Okay, inquiry. Let's see. Average work week. Here we go. Average hourly earnings increased by 8 cents. Average hourly earnings have increased by 4.8 over the past 12 months. 8 cents. So 8 cents would be 3103 divided by the prior number of 3095. That gives you 0.0025 times 12. That's about 3%. That's lower than expected. That's actually, in my opinion, good. This is not an That's not an overheating at all in the market. That's if anything, just on kind of pace. We're growing. Unemployment rate again fell by 0.4% to 4.2%. That's great. The inflation rate's only 3% for wages. That's very good. We've got 210,000 jobs. This is phenomenal. I mean, honestly, this is the best case scenario. This is literally the best case scenario. Employment in retail trade declined over this month in November. Really? Retail trade declined? That's a shocker. Let's see here. What else do we have here? The number of unemployed people fell 542,000 to 6.9 million. Both measures are down considerably from their highs. However, remain above the levels prior to the pandemic. We had 5.7 million people unemployed. Now we're at 6.9. Let's see. The unemployment rate for adults. Adult men was 4%, adult women 4%, whites 3.7%, blacks 6.7%, Hispanics 5.2%. It's actually a big fall for blacks and Hispanics. Both of them, I remember, most of the recent reports were well over 7%. So that's a big fall in the unemployment rate for a lot of folks. Now, how does the unemployment rate fall so much without having basically a ton of new jobs, right? Well, you can actually get people falling out of the labor force. So let's read what we got over here. See, among the unemployed, the number of permanent job losers declined to 1.9, but it's still 623,000 higher than usual. Number of persons on temporary layoff decreased by 255K. The number of long-term unemployed, those unemployed for more than, hold on a second, why is this not working? There we go. There we go. Okay. The number of long-term unemployed, 2.2 changed little. Okay. The labor force participation rate edged up. Oh, that's good. That's actually much better than expected. 61.8. Participation rate is still 1.5 percentage points lower. That's a lot. Remember, 1.5% on top of our our population or working population of about 150 million people is a lot, right? So we want to get that labor force participation rate up. Number of persons employed part-time for economic reasons. Stupid thing. Look at that working. Okay, number of persons unemployed part-time for economic reasons at 4.3 million changed little. And number of persons not in the labor force who currently want a job was at 5.9. Little changed over the month, but up 849K since Feb. Marginally attached to the labor force, little changed, 1.6 mil. Share of people who teleworked was 11.3%. And in November, 3.6 million people reported they were unable to work because their employer closed or lost their business due to the pandemic. 1.2 million people were also prevented from looking for work due to the pandemic. Let's see what else we have here. Monthly growth has averaged 555K. We came in at 210K, so a lot less than expected. And let's see if we have any revisions here. Okay, professional business services added 90,000 jobs. Administration, white-collar style jobs, technical service jobs, 69,000 below its level in Feb 2020. Warehousing increased 50K. Construction employment increased 31K. Stupid thing. I don't know why. One of these, this darn computer won't turn on. It's Apple again. Apple's back at it again. Employment and financial activities continued to trend up. 13,000. Manufacturing added 31,000. There we go. Wow. What's wrong with that thing? Anyway, employment, leisure, and hospitality up 23,000. Healthcare employment unchanged. Employment little change in other major industries, including wholesale trade, information, other services, education. Okay, what about, let's see, any particular losers? Not really. Not a lot of negs here. Good. I mean, it seems like an overall very, very good report. I'm happy with this. It feels like, quite frankly, the best case scenario. September payrolls revised to 3. Let's listen to this for a second here.
Numbers not helping.
Austin, should I put you in that camp with Steve and Karen as well? Just the ones who don't necessarily believe the headline number, or what do you think?
Well, I would say I have a theory, which is if you start your own company, you show up in the household survey as employed, but you do not show up in the establishment survey because you don't have any track record. You're not in the tax records. So as you come out of recessions, a lot of times, if you got a lot of new business formation, you'll see big revisions and you'll see a divergence in the jobs being created, they say in the household survey, above what's in establishment. This is actually interesting. I was reading the Wall Street Journal last night, and take a look at what the Wall Street Journal said yesterday. I actually retweeted this article yesterday. So if you don't yet follow me on Twitter, I encourage you to follow me on Twitter at RealMeatKevin. But anyway, take a look at this. Workers quit their jobs in droves to become their own bosses. This was from a few days ago, but it was still sort of a lead up to this. The pandemic has unleashed a historic burst in entrepreneurship and self-employment. Hundreds of thousands of Americans are striking out on their own as consultants, retailers, and small business owners. The move helps explain the ongoing shakeup in the world of work, with more people looking for flexibility and then anxious about COVID exposure, upset about vaccine mandates, or simply disenchanted with pre-pandemic office life. Number of unincorporated self-employed workers has risen by 500,000 since the start of the pandemic. The Labor Department shows to 9.44 million. And what's interesting, let me just show you the chart here really quick without going through the whole thing. If I just go to Twitter, you'll be able to see my last tweet here. Yeah, here. Look at this screenshot. It's from the Wall Street Journal. And this shows you monthly volume of business application by likely non-employer. So basically, by likely self-employed folks. This is kind of what we're seeing. Anyway. Okay. So let's go ahead and see how the stock market is reacting to the goodies that we've got going on here. I am expecting very good, but given that this darn thing was not awake, I will find out in just a second. Here we go. There we go. Okay, good. So what do we got here? Ooh, look at this, a reversal in Upstart. We know there's been some accelerating progress for Zillow, some buybacks of the stock at very cheap levels. And it looks like they're progressing on offloading their properties to commercial individuals, larger funds. DocuSign just continuing to get smoked. It's at 160. I did a video on DocuSign yesterday if you wanted to see a deep dive on it. DD Global, it's getting closer to getting delisted.
Look at that, down 10.13%. I think that's going to be bad for the other Chinese stocks, and it is. JD following 4.93%. Look at that. Alibaba down another 2.38. NEO down another 2%. These companies don't deserve the pain, but you can't look at these companies and just isolate them and suggest that, oh, you should buy these companies because they're a good value or whatever. You have much more risk than just value at these companies. You have a huge risk that these companies get delisted, and then you have to figure out how to get your shares out of the Hong Kong Stock Exchange. Do you want your shares to be in the Hong Kong Stock Exchange? Probably not. So what do you end up having to do? Well, you probably end up having to, create a brokerage or not create a brokerage, but open an account at some sort of brokerage who's capable of trading these shares. Who knows? Maybe Fidelity and TD can help with something like that. And you'd certainly be in a market with a whole lot less liquidity of like Robinhood style buyers or whatever. So you'd expect that the price the market would be willing to pay for those shares would be substantially lower. So that's usually why you see these things sell off a little bit when you talk about delisting and then relisting at a different exchange. Anytime you take liquidity away, it's just a bad thing. It's that simple. All right. So, it might